SCHD recently went through its annual Reconstitution for 2025. We welcomed 20 new companies to the party, and I think it's looking as strong as ever. We also received the largest first quarter dividend payment in SCHD history, by far. We're talking 22% higher than the previous all-time high. And I'm not done. SCHD has also outperformed the market so far in 2025. There's been a lot going on with SCHD, and in this video, we're going to dive into all of it. You may be asking, is now the time to buy SCHD? And my answer remains unchanged. I'd like to reiterate my recommendation to
Get it, girl. Get it, girl.
If you're new to the channel, welcome. My name's Jeff Teeples, and here we aim to grow your wealth with simple, time-tested solutions. Please roundhouse kick that like button, subscribe if you haven't already, and drop me a comment down below with anything that comes to mind. A quick shout out to my affiliate links before we dive in. I like to keep this thing sponsor free. If you or a friend are interested in trying Snowball Analytics or Seeking Alpha Premium, both awesome, you can use the link in the description below to do so for free. If you like what you see, you can help support the channel at no extra cost to you by going beyond the free trial. A huge shout out to the 2 of you out there that used my link within the last week. It had been about a month or so, but I see you and I appreciate it. Okay, you know what time it is. Let's grow. SCHD Basics. Growth stocks have been on a massive bull run for over a decade now. It's hard to understand the importance of quality value ETFs like SCHD when its growth friends are running laps around it. But we've seen a little bit of that power so far in 2025. Growth ETFs have run into a wall while SCHD has eked out positive returns. Investors often forget that SCHD outperformed the S&P 500 for over a decade after inception, and it only recently fell behind over the last couple years. There's something to be said about a balanced portfolio in all markets. The growth bull run will not continue forever. Now, we would all be extremely rich if we knew exactly when the tables would turn. You don't. I don't. Nobody does. But we do know that we can continue to accumulate more shares of SCHD. Let's quickly cover why we should consider doing that. I've pulled up SCHD on Seeking Alpha. You can see that it's currently priced at $27.75. Keep in mind that we did recently have the 3-for-1 share split. I know it's been a while, but still hasn't been that long. It's worth mentioning in October of 2024. And that's why this is about a third of what it used to be. And out here on the summary tab, I just like to point out a couple of key factors of SCHD. Its expense ratio is one of the lowest at 6 basis points. So you keep that money in your pocket. And boy, oh boy, is this thing popular. Its assets under management is $70 billion. That's good liquidity, and this thing is not going anywhere. And I've scrolled down on the summary tab here to the fund profile, and I come out here just to show that this is a passively managed ETF. You can see that it seeks to track the performance of the Dow Jones US Dividend 100 Index, which we're going to dive deeper into when we get to the Reconstitution section. And now coming out to the holdings tab here, and on the holdings breakdown, you'll notice there's been a lot of changes if you're a longtime follower of SCHD. Financials was the #1 sector after last year's Reconstitution, and you can see it's down to only 9%. Now our heavy hitters after the shakeup are energy at 21%, consumer defensive is up there at 19%, healthcare is at 15.5%, industrials is at 11%, and technology is still around 10%. And then you have consumer cyclical at 9%, financials at 9%, and communication at 5%. These sectors have changed quite a bit from what they were before, but you'll notice that none of them exceed 25%. So you still have a nice sector balance overall. And for the top 10 holdings, and I won't read all these off, we'll get into more of some of these new ones when we get into the Reconstitution section, but you can see that they make up about 40% of the fund and nothing exceeds 5%. So it has a good way of balancing itself out compared to most ETFs, and its number of holdings is 104. And now, my friends, we get into the dividends tab. This is why we're all here. Okay, this is ridiculous. I am just seeing this specific page for the first time since the Q1 dividend. We now have a much higher 3.74% yield. That's been mostly around 3.5 the last year or so. And in our trailing 12-month dividend growth, it has been a very nice 16.69%. And the 3-year dividend CAGR, and that's the annual growth rate of the dividend, is 11.26%. That's phenomenal. You come down to the 5-year dividend CAGR at 11.44. Geez, that's consistent. Okay, and then the 10-year, just to drive that point home, is 11.3. This is pretty incredible. We've been around for 13 years, and thus we have 13 years of consecutive dividend payments, and every single year has been better than the year before, with 13 consecutive years of dividend growth. I like to show this chart right here. You can see that in 2015, we had 38 cents paid per share, and now out to 2024, we're just under $1 per share. So this thing's nearly tripled in just this 10-year timeline. I quickly want to touch on the charting tab before we move on, and I won't drill this home in too much detail because I'll have a video like I do every quarter reviewing the dividend growth ETFs for the first quarter of 2025, and that's where I do a detailed compare of all my favorite dividend ETFs. But just zooming out here, we'll look at the 5 and 10-year total return. So I've pulled up SCHD, of course, and then in order of my favorites, DGRO, VIG, a couple dividend growth ones, VYM, more of a high yield, but still less yield than SCHD, and then the market itself, VU, just for context. So you can see the market has outperformed the dividend payers in the last 5 years, but to all the SCHD haters out there, SCHD has been number 1 on total return. So not only has it grown the dividends the most by far, and it has the highest dividend yield, but it's also had the highest total returns. Now, when we scooch it out 10 years, take a look here, it's really close. It looks like DGRO is the champion, and then SCHD and VIG are basically tied for second, and VYM, as per usual, brings it up the caboose. And again, the market has been stronger, but SCHD is making up some ground. So maybe SCHD and friends are on their way to catching the market here as value has its time to shine. Time to dive deep into the March Madness of SCHD. 2025 Reconstitution. SCHD executes a reconstitution after the third Friday of every March. This is the process of adding and dropping companies from the ETF. Now, it does rebalance the weightings on a quarterly basis, but it only adds new companies once per year. Let's check out the 20 new additions to our favorite dividend growth ETF. Before we jump into the additions and the subtractions from the reconstitution, I think it's important to discuss the SCHD selection process. And this is the methodology from the Dow Jones US 100 Dividend Index. So in order to make the initial screener, the company must have paid a dividend for 10 consecutive years. And again, that's just paid a dividend, not necessarily grown it for 10 consecutive years. It must have a market cap of at least 500 million and an average daily trading volume of 2 million. Those are pretty easy requirements. So really the 10-year one is the tough one on that first step. And then of all the surviving companies from that initial screen, it sorts them in descending order by yield, and only the top half are eligible for scoring. So it immediately gets rid of those low yielders before it even ranks and scores them. And it scores them equally on free cash flow to total debt ratio, and that's why it always is known to have clean balance sheets compared to some other ETFs, dividend yield, the return on equity, and then the 5-year dividend growth rate. So there's some context on how it does what it does. And now that we have this context, we can check out the companies that were added to SCHD in the 2025 reconstitution. We're going to start with the companies that were removed from the index here. And you can see that there were 17 of them. And I just should provide some context. I don't get too wrapped up in the individual names that are added to and dropped from the ETF because I know its methodology is doing its thing and I really do trust the process. Like last year, everyone was so mad when Broadcom, as an example, was dropped, but it just didn't have the yield at the time. I like to just let it do its thing. Here are the 17 companies that were dropped, and you can see these top few were pretty big holdings, with the weight of Pfizer being 4.3%, BlackRock 3.83%, and US Bancorp at 2.55%. And now the rest of the companies didn't add up to that much, but still, you know, it has quite the impact when you add them all together. And for their dividend yields, you can see them here. So Pfizer was a high yielder and a high percentage. So this one would hurt the overall yield, but probably help the growth rate and profitability and things like that. BlackRock was a little lower on the yield, and then US Bancorp was 4.14%. And now let's hop over to the ads. And you can see here that we had 20 companies that were added. And there's some pretty high weightings here on the top couple. So ConocoPhillips and Merck are going to be over 4% each, and they both have, interestingly, about the same yield at 3.15%. And then we have an ad here, an energy that's in the 2s. Target is at 1.9, and then we get General Mills at 1.29. The rest are under 1%, but you can see low to mid yields for the most part. I can see why a lot of reports showed the yield stayed about the same, but the growth rate should continue to grow at about 7 to 8%. So really, I think the profitability is going to get a little higher. Its value proposition is going to be increased. You can see that 5 energy companies and 5 consumer staples were added. And if you remember, the holding percentages saw major changes with energy and consumer staples flying up, and that makes sense, and it dropped 0 of them. Whereas you have things like industrial, it dropped 1, it added 1. Materials, it added 1. But that consumer discretionary dropped 6 companies and added 2. And financials was the big one. It dropped 9 of them and added 5, but I think it dropped quite a bit of weight, as we saw earlier. It used to be the #1 sector, and now it's way towards the bottom. I think it's great that SCHD sticks to a specific set of rules without making exceptions. Trust the process, baby. Oh no, not the 76ers process. This works way better than that. Keeping gut decisions out of these passively managed low-cost ETFs is the key to long-term success. And SCHD gets bonus points over its dividend ETF peers like DGRO and VYM and VIG because it has less overlap with the best growth ETFs out there, such as SCHG, VGT, or QQQM. This helps to create a balanced portfolio that will perform well in a variety of market conditions. And one thing to point out about the Reconstitution that just took place, we won't see those changes unfold into the results until we get our dividend in June of 2025. But we did just receive our last dividend based on the old construction of SCHD. You're gonna like this. 2025 first quarter dividend. SCHD paid 24.88 cents per share on March 31st. This was a staggering 22.2% increase compared to the 20.37 cents per share in the first quarter of 2024. And if you're keeping score, that was also an all-time high back then. SCHD has been a dividend growth monster since its inception in 2011. Its lifetime dividend CAGR is 11.6%. Sometimes dividend stats like that don't really seem like that big of a deal. For example, 10% growth is only double 5%, right? Wrong. We got a compound problem. We're going to hop over to my screen so I can show you what a high dividend growth rate does over time. This is one of those things you have to see it to believe it. If you've been around the channel for a while, you probably recognize this spreadsheet. And keep in mind, this is a lot of shares because this was a retirement scenario where someone had $500,000 to plop into the market. So this isn't where we're gonna start when we're accumulating shares, but I just wanna show the power of the dividend growth. And we're going to be fairly quick here because I have a whole nother video that I recently released that details this scenario, but we're just gonna focus on the dividend per year. And we're starting here in 2012, we had 27 cents per share. In 2013, it was 30 cents. And remember, this doesn't care how many shares you have. This is just a per share dividend. So it's true growth. It's irrelevant how many you have. For every share, you got 35 cents in 2014. So you keep working your way down here and you quickly get up to almost $1 as of 2024. So you've already almost gone up 4x. And this scenario actually started in 13, but even it's gone up just over triple per share. And this is the total dividends received for this retiree that dumped $500,000 in back on this year in 2013. You can see they went from $15,000 of dividends a year to $52,000. And again, this is not reinvesting. They spent all the money. They only have the shares they had. They have not put any additional money into it. Just the initial $500,000. dividend, which, by the way, at the end of 2024 was worth $1.446 million. And when you add these dividends that they received since 2013, this year was just a placeholder, they've had a total return of $1.3 million. Not too bad on $500,000, barely over a decade. That is the power of a measly 11.5% average growth. Get you to over 3 times the dividends that you started with only a decade prior. And I'd like to point out, I'm on the data tab here. This is the recent dividend, the one we just received, the 24.88 cents. As you can see, first quarters are usually pretty low. The highest ever first quarter previously was about 20 cents. So we are on a nice little pace, hopefully, to dominate this 99 cents per share by the end of this year. And here's where you can see that quarter over quarter. So this is first quarter versus first quarter. We're already up 22%. We're off to the races. I think SCHD will produce quality results for many decades to come. Final thoughts. SCHD is easily my favorite dividend ETF. I can't get enough of its amazing combo of a high starting dividend yield, incredible dividend growth rate, and a very respectable total return. I strongly believe in its methodology advantage over the competition long term. I don't plan to add another dividend ETF to the portfolio in 2025, but never say never because I do like to stay open-minded. But staying the course is equally important. Don't start adding new positions based on the results over a few months. Remember to take a breath and do your research. The next great stock or ETF is out there for you to find, but you don't have to swing for the fences at every single pitch. And check out one of these 2 videos to continue down your path towards financial freedom. Remember, money is overrated. Freedom is not. Thanks for watching, and I will see you here in the next one. Peace.